Morning. Today is January 31st, 2024, the last day of January 2024, the last trading day, January, and of course, as you know, it's Fed Day, the Fed announcement day, and everybody obviously expects them to leave interest rates unchanged, but the important thing is going to be what they say about the March meeting because as you know, at one point earlier, I think towards the end of the year last year, the first rate cut is priced in for the March meeting. And as all the economic data's come out, that's kind of changed here and there. So I don't know, like a week ago, I think it was like 50-50 chance that they're going to cut at the March meeting. So today's going to be a pretty important day. And lots going on. We had the big tech earnings, a lot of big tech earnings come out last night, and amazingly enough, some of those stocks are down fairly significantly. So take a look at the S&P here. It's been pretty relentless march higher, and a couple of these days, especially like Monday, the market actually started off kind of weak. Um, yeah, I remember a couple of days like intraday. It's actually it was pretty dull, right? What was I looking for here? These candlesticks. For some reason, this my stock chart seems to be a little slow today. Yeah, I know what it was on Monday. Like nothing was happening for the first half of the day. Look at these narrow little ranges here, right? Yesterday was one of the well, it was definitely the tightest range of the year. Look at that. I mean, just barely any price movement. So obviously, the market's kind of waiting on to hear what the Fed says, and they've been waiting on these big tech earnings, and it's been sort of a relentless march higher, but at the same time, the overall price action's been relatively dull, right? So I expect maybe the action will pick up a little bit after today. Interestingly enough, you got kind of this kind of looks like a little near term topping pattern, right? There's the 50-day moving average. Kind of reminds me a little bit of some of these other little dip patterns here where you march up and then that's I guess what you would call an evening star. I suppose it needs to be confirmed, right? Like it's today could easily turn around based on what Powell says, but it seems like this sort of relentless march higher, just a couple of little tiny minor dips along the way, seems to me that back in the day, Fed meetings were really good, really good. A lot of times the market, whatever the trend was, whether it was up or down, they were inflection points, right? You'd have the Fed meeting and Powell would say something and it's not necessarily it's the language that everybody's going to be concerned about. Obviously, they're going to leave rates unchanged. So I'd be surprised, everybody would be shocked if they actually made any sort of a move. And so everyone is looking to see what the forthcoming pace of rate reductions, I guess, is going to be. So if he hey, with the I've seen a lot about this with the economy doing so well. The economic numbers have been pretty good. The unemployment numbers are good. Inflation has come down. The economy seems to be, consumer confidence is high. I mean, everything seems to be like humming along normally. And so the big question is why would the Fed lower rates, right? Because well, just because. But anyway, real quick, let's look at some of these now that the market's been open for a little while, notice how slow this is today? I'm not sure what that's all about, quite honestly, because when I was going through charts this morning, it seemed like they were moving pretty slow. Look at this is kind of an odd looking candlestick here on Microsoft, right? That is actually very odd. Huh? Because I mean, it was down fairly significantly after hours last night. Um, huh? That's weird. That little spike up. It's tempting to look at a 5 minute. Let's look at Google just for the fun of it. Go through some of these. Yeah, big gap down on Google. Huh? That's interesting. Very significant gap down to under the 50-day moving average. Yeah, Google's kind of zoom back a little bit here. Yeah, that's pretty interesting. It looks like their last earnings. Huh, I happen to have the earnings on here. It looks like their last earnings it did something very similar. A significant gap down, a couple of days of follow through to the downside, and then it rallied along with the rest of the market. So that's kind of interesting to see. Um, they were interviewing the CEO of AMD. AMD's got one of those sort of spike highs there. It had a pretty decent little gap down this morning. So interesting thing about AMD is, for whatever reason, I'm looking at got candlestick charts up this morning, which I don't particularly favor over the other ones. I actually like open, high, low, close charts, but interestingly enough, AMD had a similar sort of dip back here, like right at the end, or I should say the beginning of the year, and it recovered like almost immediately, right? Let me go back to my regular charts here. There we go. Put in AMD. It looks a little bit different, so I kind of favor these charts. I mean, yeah, I look at candlestick charts, but I prefer the open, high, low, close charts for whatever reason. I'm just more used to looking at them. Um, yeah, so you can see what I was talking about there. Like AMD had this run up in December, and then a few days of a dip, and then just right back. Right, so it's going to be interesting. Whenever I see a pattern that looks like this, I would assume that it's going to take a little bit of time to play out and head lower. But of course, this is one of the one of the darlings. See how Nvidia was down after hours last night as a reaction to AMD. Yeah, there you go. It's just a little bit of a gap down. So, like I said last week, this is obviously one of the must-own stocks. You can kind of tell in 2024, I think that any funds and/or institutions that didn't already own a bunch of Nvidia, they probably just closed their eyes and bought because they had to show it in the portfolio. So let's look at some of the other big cap tech stocks here. Meta, gap down in a rally. It's interesting how, a lot of these magnificent seven stocks, I guess you would call them. It's interesting how when they have a gap down like that, Apple's looking kind of weird here. Huh. I mean, this is a pretty significant sell down in Apple over the last, what was that, 5, 6 days in a row. So, huh. Well, that's kind of interesting. Yeah, this is not really the prettiest pattern I've seen on the charts. A lot of choppiness here. There's a 200-day moving average. Huh, interesting. So what I wanted to look at here was the weekly chart of the S&P because as we zoom back out for the big picture there, there's the pandemic sell-off, there's the big rally, the cup, the handle, and the breakout. And of course, as we pointed out last week, uh-oh, I hope there we go. As we pointed out last week, this thing was up like, what was it, like 12 out of 13. Look at this week, though. So the interesting thing about this is since it's Fed Day here, all bets are off on how this thing closes. So everything's going to depend on the reaction to what Powell says. So, the question is obviously, the Fed assumes that they're restrictive right now, and so now that theoretically the rate of inflation has decreased. It's still above their target, and of course, like we talked about over the past couple of weeks, you got to take the fact that it's an election year into account. But the last thing that the Fed wants to do is start lowering rates and have inflation come roaring back at some point, right? That's the big fear. I mean, inflation has just been and inflation was the big problem they created, obviously, which they certainly haven't taken credit for. They haven't taken credit for the fact that they caused the inflation to begin with. So, yeah, this is really weird how the charts seem to be acting so slow today. I don't know what that's all about, but so we like to look at the IWM to get kind of a decent idea of what maybe the broader market's doing besides the mega caps. So kind of interesting. It pulled back here to the 50-day moving average and caught a bounce, and so it's hovering right around the what's been a resistance level for a long time. So kind of zigzagging around it. So interestingly enough, the Russell 2000 has sort of been moving inverse to the Nasdaq, right? And I guess the idea is that the money's not coming out of the market. It's rotating around in the market, and so if they start selling the big cap tech stocks, the Magnificent Seven, then the idea, I guess, the assumption is that it's going to go into other stocks, the smaller cap stocks. So that's kind of weird. And there's we're in one of these weird periods of time where also the it's like the Dow, the S&P, the Nasdaq all seem to, on a day-to-day basis, they don't necessarily move in the same direction, which is a little odd. The Dow is just absolutely incredible here. This move since November. Let me switch this to a weekly chart. Get a bigger look at it. Yeah, the Dow, pretty incredible. Pandemic sell-off, big rally. This is not even so much of a cup and handle as the other indexes, but boy, once this thing broke out, it just kept going, right? And so same thing with the Dow. You got, I guess I could count them, 2, 4, 6, 8, 10, 12, 14. So, I mean, it's literally like, 13 of the last 14 weeks up, which seems highly unusual. I mean, even back during the big run up after the pandemic, you had 4 weeks, three, 4 weeks in a row or whatever, it's up, but to have this many weeks up in a row, pretty outrageous. So, just seems like there's a relentless bid under the market. Let's look at the Nasdaq 100 here. Same sort of thing, I'm sure. Well, actually, interestingly enough, there's the same sort of price action, but we were having a down week right here. So I think everybody's kind of, not everybody, but I'm sure there's a lot of dip buyers in the wings. You got a similar breakout here on the Nasdaq 100 as the Dow. It doesn't seem like it's broken out as forcefully as the Dow. But yeah, it's kind of this is just a beautiful cup and handle. So here's the thing about the 200-day moving average is, a lot of, and this is a weekly too. 200-day moving average seems kind of valid on the weekly chart too. Honestly, it kind of acted as support. That's just a beautiful pattern right there. And so even if, even the market kind of deserves, it kind of seems like it would be an appropriate time for a little bit of retrenching, a little bit of a pullback. Let's look at go back to SPX, looking at this chart here. Yeah, interestingly enough, so you saw the breakout on the Dow and the Qs, but it's kind of interesting that the S&P is just barely sort of poking above these prior highs. And of course, as I've mentioned a few times here recently, the S&P needs to be inflation adjusted all-time high, which, is neither here nor there, but you got to take it into consideration, right? So it's like, if this was like, I saw a chart the other day that had several like really long. There's only been a few of them, but there's been like decade-long periods of time where the market sold off and it never, it took 10 or more years to come back and exceed the prior high. And in a case like that, obviously, the inflation that occurred in between would be fairly significant and important. But in this case, it's still relevant, right? It's still relevant, I suppose, because hey, everything's based on purchasing power and inflation and that type of thing. And so, as we know, the money supply has increased, since back over here, right? Over the last, X amount of years. Since the pandemic is kind of a milestone that kind of a milestone because obviously, a lot changed when the pandemic hit and the response to it. So, anyways, my point is the money supply has increased like 40%, even though theoretically the Fed is tightening. But anyway, it's interesting to see that the S&P is just barely poking out of the nominal prior high, and it really needs to be up here, around 5,300. I've done the calculations in order to match what it was there. So it is what it is, but kind of interesting. So let me go back to a daily chart. It seems like if I click something here without actually choosing it from my watch list, that it loads a little bit quicker. Um, so I'm back on the daily chart here, and what I wanted to look at was the financials because now it is kind of slow. Huh, that's odd. Yeah, this is highly unusual. I mean, I have a normal internet connection. Everything's been fine here. For some reason, the stock chart's just slow. Yeah, there's some bank I wasn't really paying attention to it, which one it was, but it's a fairly significant sized bank is like down significantly. Um, and so let's see what the XLF looks like. The financials. Oh yeah, the XLF, like big money center banks and that. This is one heck of a pattern. It's kind of I've seen a few people mention that how bullish it looks, but the smaller banks, what's that KRE, that regional banks, yeah, it's kind of a gap down here this morning. So interestingly enough, I know what I wanted to look at was Boeing. We were talking about the Dow. Yeah, the Dow being price weighted is always throws everything off a little bit. But let's look at a weekly chart of the Dow here. Or I'm sorry, not the Dow, the weekly chart of Boeing. Yeah. I remember years and years ago, and it could have been like back here, I mean, years ago, CNBC, the market hit an all-time high, and CNBC did some sort of a special or whatever, and amazingly enough, they said that Boeing was like the number one performing Dow stock over the last, 20 years or 30 years or whatever. But that must have been over here somewhere. But look at this. This is pretty amazing. This is a monthly chart of Boeing. Lots of problems happening there, obviously. Yeah, it's incredible to see something like this because back in 2019, this was over $400, and now it's right around $200, and so that's a long period of time for, especially a stock like this. I mean, there's two major air airplane manufacturers in the world, so eventually they'll turn it around, I suppose. Let's see, UPS announced layoffs. There's a weekly chart of UPS. It's kind of shocking, honestly. Especially what blows my mind is that, nowadays with everything being delivered, right? I mean, UPS is on my UPS, FedEx, and Amazon are on my street every single day, and probably yours too. And just amazing to see. Amazing to see. Well, it wasn't that long ago that they announced their drivers are making, like, they had to give them big raises or whatever, but that's kind of a nasty looking chart, especially for a weekly chart, right? I mean, it's getting hammered this week, so down fairly significantly. Well, I guess this is what I do like about these stock charts is when you switch to a weekly chart, it actually shows the return. A lot of charts don't do that. They continue to show the daily return. So yeah, UPS down almost 10% on the week. Wow. Um, let's take a look at the semiconductors here. Weekly chart of the, well, these triples. I guess SMH is a thing to look at because these leveraged ETFs aren't a good reflection of reality. Yeah, semiconductors. Look at that beautiful, beautiful weekly chart. Cup and handle. I guess you call that a cup and handle. The right side of the cup is just slightly higher than the prior high, but same sort of thing. Semiconductors have always been one of those. Let's look at a monthly chart just for the fun of it. Yeah, look at that. Absolutely incredible, right? I mean, that's man, if you saw a daily chart that looked like that, I mean, the fact that we know what it is, and we know it's a monthly chart of the semiconductor ETF, but yeah, it's pretty amazing. Let's see if I look at that. So I guess this ETF started like back during the dot-com bubble, and it's pretty amazing to see. You can see the run up to the peak in the dot-com days, and then seems like it was relatively flat for 13, 14 years, but pretty incredible, really. Pretty incredible. So, of course, semiconductors run everything. Back in the day, there was, a few semiconductors in cars, and now cars are loaded with semiconductors. Yeah, it's pretty amazing. So, it's no wonder that everybody looks at the SOXL because it's triple long semiconductors, but you can see you can see that that's not always a good thing. As a matter of fact, you'd have been a heck of a lot better off as an investor just being in SMH, the regular ETF, than this triple here, because anytime that there's a pullback, it gets magnified. So I saw some chart the other day where somebody used USO. It's the same sort of thing. I mean, this is like USO. I remember when this ETF came out back here, and it was supposed to track. Theoretically, it was supposed to track, like, the price of a barrel of oil, but you can see what a disaster it's been. And this is a bunch of reverse splits is the reason. It was never this high, but they use futures, so you got to be aware of the leveraged ETFs. And so whatever it is that they do with the futures contracts and that, you can see they've reverse split it a bunch of times, and as we speak, it's close to the price of a barrel of oil, but it's just it's a terrible, terrible long-term investment. So we're right in the thick of earnings season, and it's going to be interesting to see how things play out here. Switch back to a daily chart, and real quick, just back to the S&P here. Yeah, I mean, there's not a whole lot to say because not a whole lot to say until we hear from Powell what the plans are for, what the plans are. So it feels like the kind of market where even if we get a sell-off, that they're gonna snap it up and buy it. So it's just relentless buying in the market, and sometimes I wonder if that's sometimes I wonder if it has to do with keeping up with inflation. I've talked about that before. Oh, look, we could be looking at a red week, right? Which would be kind of insane, but there's always the idea that a little retrenching, a healthy pullback, as you call it, pullback to the breakout level would be constructive. Um, Over the years, anytime that I start to get this feeling that, nothing can torpedo this market, it feels like nothing can hold this market back. Right. And even, I mean, it's like a couple of down days or even a little pullback is not going to scare anyone, that everyone's just waiting for a dip to buy. Anytime I get that feeling, it makes me nervous because I know, and it's the same way when the market's selling off, like, right? Like when we get these sell-offs in that, I think, oh man, at some point when it gets like scary, you think, oh, what can possibly turn this market around? And whenever I sort of get that, and it's not just a function of price, it's a function of time, then I know I know better because over the years I've seen it so many times where the conventional wisdom is kind of gets all one-sided, and then that's the time to be cautious, right? So um, we'll just have to see. But anyway, we got to see what Powell says, what the market reaction is. It kind of feels like we could be, getting a blow off top of some sort. So it's interesting. After all these earnings come out, then everybody can sort of reevaluate what the valuations are. So I've seen some charts and graphs that I think Goldman Sachs put one out that basically valuations are extremely stretched, right? So no mystery, but that doesn't necessarily mean anything. So the last thing that I wanted to mention before I sign off here is, lo and behold, we got the weekly RSI right around 70 here. So um, as we can see on the chart, the last time that the RSI poked over 70, it was a fairly significant, over 14 weeks of sell-off, right? Like the last major sell-off we had started when RSI on the weekly S&P poked at 70, and so here we are again, right? And of course back here, this is kind of, as you can see, this was the run up after the pandemic, which kind of was skewed, I believe, by a lot of different things. So this seems more like a little yellow flag here on the weekly chart to me, and I think that's probably a sign that maybe the market does need to retrench. So all eyes are going to be on this breakout level here. So anyway, thanks for tuning in. See what the Fed has to say, and I'll see you back here next week.